Okay, so what I wanted to do is kind of clean up some some myth or some legend or some, maybe some misinterpretation. Okay, so in the last, I don't know, couple of meetings, a couple of weeks, maybe even a little bit longer, we talked about the uh the 6 month candle and maybe some of the significance of us approaching the close of this 6 month candle. All right. Um, Specifically because of the size and the range and what we anticipate um, to happen. Okay, so let's kind of discuss some of the misnomer and maybe even some of the gray area. Okay, so first of all, the candle didn't tap into the area that I anticipated it tapping into. So that is still a possibility for it to go up a little bit more before it pushes down. I looked on Friday, and I guess towards the end of the day, like that last piece of the day, it sold down a bit. But just so we understand, we're not below the moving average. So price can just come down, touch the moving average, push up into our zone before we see a push down. So even if you're anticipating a move, it doesn't necessarily mean that you're going to get it right off the bat, right? We have a weird week, with a holiday in the middle of it. So don't don't jump the gun. Don't don't just start selling just because we've discussed it for so long. Okay, I think that we probably need to push up a little bit um, with at least the GJ candle. UJ, I don't feel the same way. I feel like UJ hit the areas that at least I was anticipating. I don't know, what you guys have, but if I look at the monthly, it checked all the blocks. If I look at the 2 month, all the blocks. Um, so I think UJ is probably in a better position to actually do what we thought it was going to do. We got the bearish daily OB. Um, Remember, it's not just going straight down. We'll come down, we'll take out swing lows, we'll probably bounce. So when you start looking for your entries, you don't have to overdo it. You can walk into the trade, and you can also re-enter during during bounces. Okay. Um, if I were you guys, I would still try to manage my trade on the lower time frames. And once you enter these trades that you're expecting to go for a greater distance, you can manage them on the 4 hour, or if you don't want to be as involved, you can manage your trade on the daily. The 4 hour is going to give you more opportunity to add to your position, and the daily will be the second best opportunity to add to it. But if you just want to kind of set it and let it roll, then the daily is probably the better option for you. All right. Do you guys have any pair you want to talk about? Anybody? Can y'all hear me?
Yes,
I
we
hear
hear you.
in that GJ lately, but it looks like y'all already been talking about it.
Well, we can talk about GJ. Um, to me, I think GJ may still have some to push up. I was looking at GJ to start selling on Friday. It did go sideways. We got the daily wick, so it's possible that GJ could push down, but it's also possible that GJ could push up before it pushes down. So I really think that we have to give this one space. I want to see GJ break these lows, right? It's more than likely going to bounce. We'll probably get a head and shoulders because of the movement. We'll break these lows first. It'll come back up, and then it'll push down. The second half of Friday, GJ did sell, or that second 4 hour period of New York session, GJ did sell, but it didn't like really break any records on the sale. So that's what makes me feel like it might just go up, continue up a little bit before it pushes down. But if you are somebody who's going to take advantage of the short sales, the short-term sales, you can do that. But if you want a pair that you're going to get in and it's going to move, then I would probably say UJ is in a better situation than GJ is for a sell. Hey, Kim, I know little Kim sent me the analysis. I just got to check and make sure it's the right date.
You had the right date the last time.
No,
You
no,
just
no, 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 no.
you
You
had
sent.
the right date the
Listen,
last time.
you sent last week's. You sent the wrong one last week.
No. You just picked the wrong one out of the
No, no,
files
no.
that
I
we
didn't.
had.
No, I have the email.
Oh, okay.
I only send the one you send me on the email. I don't go
See,
into that.
I sent the correct one
Live.
today,
Yeah,
this
today.
morning.
Okay, I got to check it. But when you were doing your analysis,
Mm-hmm.
did you feel like GJ is going higher first?
Well, GJ is bullish for me, so I'm looking for buys. Like even with that 4 hour pullback, and then it started breaking structure to the top side. So I would still be looking for buys. It's not bearish at all for me at this point.
Yeah, I think it's probably going to go up too. I don't know if it'll go up these 300 and some pips, but I think it's a possibility.
Yeah, that's possible. GJ gives. And then you have, I don't know what that blue zone is up there, but there's a monthly and a weekly imbalance on GJ. So that's where I'm expecting it to go.
But I think we just got to be a little bit more patient for the GJ joint.
Mm-hmm.
Any other questions? There's 27 jokers in here.
And the analysis is I did a monthly and a weekly.
It's about time. We appreciate it.
Did you say it's about time?
About time. Well, put some work in.
Leave him alone. Just leave my friend.
Okay, I'm too tired to even fool with you,
Put some work
Ty.
in for the culture. You know what I'm saying? Do it for the culture.
Oh my gosh, you don't even know what the culture is. I'm sorry.
Right.
Can we?
Can we what? Hello?
Mine. Never mind.
Good morning, everyone.
Good morning.
My name is Denise, and it's the first time I'm tuning into the Zoom.
Well, welcome, Denise. Where you
Hi,
from?
Denise.
Hello, everyone.
I think we need.
Hey,
I think
DJ.
we need to do a disclaimer for the new people for
Okay.
Todd, just because. like, like, don't take anything he said personal.
Yeah,
OG.
we
And
all
OG.
just joking.
Yeah.
Sorry, I'm trying to figure out who is OG.
OG, I'm in here. I'm in
Oh,
here.
wait
How you
a minute.
doing?
Are you DJ? Are you DJ?
I am DJ.
Oh,
Welcome,
hi,
welcome,
DJ.
welcome.
Hey, y'all need to clean up y'all conversation in the goddamn chat, though.
And I'm not mad at all.
Where you from, DJ?
Um, uh, I live in Toronto. I was born in Trinidad, raised in the UK,
Oh, nice. Love it.
Very nice.
and I'm heading to Mexico next.
Oh, wow.
Or maybe Ghana. Just depends on how successful I am as a trader, because that's my retirement right there.
I know that's
Awesome.
right.
Welcome, DJ.
Welcome,
Thank
welcome,
you.
welcome. Welcome to the crazy house.
Yes.
Thank you. Well, I'll be welcome because I'm crazy too.
Oh, you fit right in.
Oh, you fit right in, girl.
I surely will. So I am I've been sort of trying to figure all of this out by myself, only because I bought a program and I learned to trade through price action, and I came across, the Pip Collector, I think, and I thought, oh, this sounds like a nice group. um and so I joined it on Discord, but I didn't really, there's just a lot going on. Sometimes it's hard to figure out where to start because there's just so much going on. But anyway, I think my interest was piqued when OG started talking about Ukraine. I thought, what, Russia? What is he saying? And so if he hadn't talked about that, I probably would never even be on here now, because I've just been sort of prodding away by myself, learning just by watching YouTube videos, and I've learned a lot. I really like the IC strategies because it's kind of adding to what I've learned. I think it's all the same thing. It's just different ways of looking at the market, but I haven't actually started trading as yet. I've just been just learning, really. So I'm about ready to start. It's kind of hard to get your feet wet because sometimes when you're learning and someone's teaching you, when you look at the market live, it's like, hang on, where do I start? But I'm almost ready to go, and I'm just looking forward to being part of this community. I'm just looking at, I don't know anything about GJ or any other pairs. I mainly look at AU and EU. So, but I'm a fly on the wall. I'm just here. I'm just looking and observing. So
How long have you been trading, DJ?
I haven't. I can't say I'm trading. I've just been learning, and I started in
Okay.
I would say February.
Okay, gotcha.
Yeah. So I have copious notes. I've got so many books. I've bought books and I'm just reading and I'm just absorbing as much information, because when I do trade, I don't want to get it wrong. I mean, I know I will make mistakes as part of the learning process. I know everybody lose money, but it's about winning more than we lose. So, and I have to get it. I have to get it because I was scammed. I lost a lot of money, and I'm not feeling bitter because I think it's kind of made me U-turn and say, "Hey, I'm going to learn this. It's going to take time because I struggle with the technology, hence I just do it by myself, because I find that a lot of you younger people, you're very quick with the technology, and you do need the technology as well to be able to facilitate your trading. But I think, anything you want to learn, anything you want to be good at, you just have to put the hours in. And that's what I've been doing. I'm just taking my time. I'm just, I go at it every day. I watch videos, I take notes. I'm going to get there. I'm like British Rail. I take my time, but I'll get there.
Can I
But
make
Denise,
I make a
Tip
suggestion?
Collector is old, so
Yeah,
you
I'm about as old as it get. But can I make a suggestion? Denise,
Yes.
can I make a suggestion?
Yes.
So you see this YouTube page that I'm on right now, ICT Mentorship 2022.
Uh-huh.
So what I've found is that this guy, he's a bit wordy, but very detailed, and it gives you a very good understanding market, and his concepts are very good. So, if you want to have a great foundation in trading and some concepts that work, I would suggest starting here. Okay. In my opinion, the 2022 mentorship is excellent, right? He also has one that's going on now, 2023. But if you go through this mentorship, he will teach you everything you need to know to be a successful trader. He also has 2 other series that I always suggest people watch. What every new trader needs. It's the ICT Went series, and then the Market Maker series. Those are both 5 videos apiece. But a lot of people will come up and they'll tell me that he's difficult to digest because he's a little wordy.
He's very wordy, yeah.
Yeah, but what I always try to tell people is, if you want to be successful, you'll digest it, because
Absolutely.
a lot of those other videos leave things out.
Yes.
So,
Yes.
this guy will take you from novice to professional, but it's still going to take time, even though you hear it. You'll first hear it, then you'll be able to see it, and even though you can see it, you still won't be able to trade it. And then you'll make that transition to where you can trade it.
Yes. But the thing is, if you're going to go to university, it's either going to be a 3-year course. I mean, you do have to spend time. And so I think, if we want to, anyone who wants to learn this, you have to think about it in the long term.
Yes.
And put that work in. At times I'm in tears because I'm thinking, gosh, when I'm going to get it? And then I have to then breathe and say, yeah, hey, it takes time, because there's a lady online, her name is Jessica Lane, and I started watching her videos.
Yeah.
And one thing she said, it was, this is art. And I thought, wow, I love that concept. It's art. Like sometimes when you watch a picture and inside of that picture there's an image, but you cannot see it. But you stare at it and you stare, and all of a sudden, bang, it comes, it just pops out. I see trading like that. You have to allow the brain to see the patterns and to kind of like merge with you. You know what I mean? You have to come into tune with it.
Yes.
And bam, you get it, because you see that image, you see what it's doing, your spirit connect with it. It's very similar, so it takes time, and we're all different. It's just about staying the course, and it's needed right now. We got to do this, because the planet is about to take us to a different level, and we have to be, we have to upgrade. So this is an upgrading for me, staying the course, getting this, and then getting that beautiful freedom that we're entitled to. So looking forward to be here, guys.
Awesome. I think the fact that you said you shed tears lets me know you're on the right path.
Yeah.
Yeah.
You have plenty of
Exactly.
people. You got plenty of people around you. You have a team. a lot of people don't view it that way. What we have here, we have a lot of special people here that bring a lot of different things to the table, a lot of ideas, a lot of expertise in things that may not necessarily be trading, but a lot of things we do in our life apply to trading. So, you know, and having the ability to, with the Discord, we're doing the video, we're exposing, and people happen to come across this video and see that there's a place that's exactly where you need to be. And the fact that you got here, you know, the type of things that I do, there's multi-purposes. I want to keep away the predators, but then also I want everyone to ask themselves questions. So when I talk, that's what it's about. And then it stirs up questions. People want to ask questions. People want to say or ask me, oh, is this what you're talking about? And then we get into the conversation. That's the reason why I do these things. It has multi-purpose, and it brings people in because they're afraid to come forward. Don't be afraid, come forward. And then you're in the know. And then now you're going to see people that were like you, kind of, do I really need to go over there? Should I go over there? Yes, absolutely. That's what this is for. So glad to have you here. And it's a great example of how people can come here and,
for sure.
and get to the next level. And we all doing it together. Like we're all trying to reach these goals together.
Amen.
Yeah, I just want to chime in here too. I'm happy to have you here because you know, we have another British voice, one that's not obnoxious and woke, you know. So welcome, ma'am. Glad to have you here.
So what's your name?
My name is Sean.
Sean. Hello, Sean. So you're from the UK?
No, there's another girl in the group. She's from the UK. And I was just joking. I mean, about her being obnoxious and woke, but there's one other girl in the group from the UK.
Yeah, Leandra's not on the call right now.
Not even
Big Marv is from UK too, right?
Yeah.
Yeah.
Okay,
Hey,
well, I didn't know it. I didn't know there was a guy also, or
Yeah, I'm from the UK.
a female. I'm not sure, whatever. But anyway, welcome is all I got to say.
thank you so much. Thank
You're
you.
welcome.
Don showed his face and all.
I don't know. I know you say you've been in the group for a while, so but I'm not sure if you know, we do these Saturday calls, or calls every Saturday. But then we also have the 5 o'clock calls every day, Monday through Thursday.
Okay, so Monday to Thursday?
Monday through Thursday at 5 p.m. Eastern Standard Time.
And what's the agenda for? So Saturdays is just going through the week, and then during the week, what's the agenda?
So on Monday through Thursday, different people alternate and go. Usually it's specifically to go over the pairs for the week and where they are, and
okay,
where we are on each day of those pairs.
Okay, right.
Or just to review, like if anybody has questions about a pair that's not on the list, just to go over and analyze, get other opinions and thoughts on other pairs for the week.
Okay.
And let me break it down for you. What I tend to trade and the philosophies and the concepts that I use is basically ICT's power of 3, right? So we'll take a weekly order block. Selena publishes a list and she puts it in the Swing Traders channel. It will have the pairs that have order blocks for that week, right? So we'll take one of those pair and you can trade that pair, and most people, in the group will be trading one of those pair that have the order block. If it's a bearish order block, we'll tend to buy it. As a matter of fact, let me just go over it since nobody really has any questions anyway. I'll just pick one of these order blocks that Selena posted. In fact, I'll share the screen so you can see.
Okay.
Okay, so if you just come to the Discord,
Mm-hmm.
The Swing Traders channel, Selena will
Yes.
she'll post the order blocks on Fridays, right? There's a list. Can y'all see this?
Yes.
Yep.
So this list has the pair that created order blocks. Obviously, she seems to add to this every week, but the weekly order blocks are here. If you want to trade 2-week order blocks, they're here. Since it's the end of the month, she put the monthly order blocks here. So we'll just take this NAS 100, right? Let's look at NAS 100. It's bullish. So let me go to the chart. Okay, NAS 100 has this bullish order block, which means we're expecting the price to pull back and then go bullish at some point throughout the week. I'm just going to take away every marking I have on here. Okay, so the way that I view these bullish order blocks is I want to fib this entire candle, right? I'm basically fibbing from the bottom wick to the top wick. I want to see where the 50% of the discounted price is. I want price to pull back to the discounted rate. Then I want price to push forward. That would be the expectation if I'm trading this pair. So once I have the weekly candle marked up, I can drop down to the 4-hour. And what I want to see is what's in my zone that could attract price, right? And even more so, down to the 78, we have imbalance. All right. Imbalance is basically when the wick of the inside candle comes up a little bit, then you have this big bullish candle. Wick of this candle, I want to see come all the way down to touch or to interact with the wick on this inside candle. That would mean that that's good price action. When you have a gap like this, it's called a fair value gap. And we expect price to come back down into this level to interact. This is where we would look for our trade. This is the fair value gap that corresponds with this impulse move. This entire move up is called an impulse move. This is an impulse move. And when price impulses, right, and it breaks these highs, when it returns, we expect it to interact down here at the imbalance, right? So we want to see price come back to the we want to see price come back to this level. Then we want to see it push higher, right? Then once it breaks these highs over here, maybe it'll pull back to where there's another imbalance in this impulse leg. And that's basically all we're doing is we are taking this weekly move and we're looking for our imbalance after it impulses. So since we impulse to the top side, that's what makes it bullish. Now we're looking for price to come back to the imbalance. So we will sell price back down to the imbalance if you want to, or you can just wait. You can set you an alarm, like this alarm right here. You can set it down to your imbalance and wait for price to trigger your alarm. And then you can look for a buy opportunity to buy it back up. Do you understand that concept?
Yes, I do.
Okay. So I mean that is it in a nutshell. And I don't care what time frame you trade on. You know, this could be the 4 week, it could be the 4 month, it could be the 15 minute. Everything is the same. You know, so if you think about this on a larger scale, all we're doing is trying to identify the liquidity. All right. So when price moves, you know, it's going to take out the liquidity, whether it's short term or long term. So if you're trading the lower time frames, if you're on a 15-minute chart instead of this 4-hour chart, you're going to pay attention to where your liquidity is on this 15-minute chart. So in this case, you see this impulse move, right? From on the 15-minute, the impulse move broke these lows. Well, you can see the imbalance right here, right? You see the wick right here.
Yeah, there's a breaker structure there.
Yeah, it's a breaker structure, but price needs to come back into this imbalance. You expect price to come back into this imbalance before it sells back down lower. And it's also important to notice that above this level, you have relative equal highs right here.
Yes.
Relative equal highs, which will serve as another liquidity. People have buy stops or stop losses for the short positions up here. So price is going to push down. Here's some imbalance here, but it'll push down into our zone, our 78, which is way down in this area. This is our 78.6. But eventually when price gets down here and gets ready to push back up, this area will be a target on the way back up because those relative equal highs. I don't want to get like people confused, you know, but in the short-term space, since we broke this low, you want to see price trade back into this imbalance for you to take a short further down, right? And your target at this point, once price gets into this space, your target will probably be these lows right here, right? Of course, it needs to break this low first, but this will be your second level of lows that you're trading to. If you're trading,
yeah, that's good. Okay, so I have to go into that swing trading.
Yes, to get the order blocks, the swing trading channel, that's where the order block list is.
Right.
Placed.
So just choose one of them. It's just recommended to choose one or whichever one I want to trade, and then just go and break it down in the charts, decide which time frame I'm going to use, and that's it.
Definitely. So if you are a swing trader, you're going to use the higher time frames. If you're a day trader, you'll use the 4-hour and probably below. And if you're a scalper, you're going to use even lower time frames. I guess the trick is to understand who you are as a person, and what kind of time you have to trade. You know, the thing I love about ICT is he also has kill zone times that, you know, that you can expect to look for these moves. You know, and it all works out. So you just have to understand who you want to be as a trader and how you want to trade. You mentioned you were trading 2 pairs. Some people only trade, you know, 1 or 2 pair. Other people like me, I'll trade anything. You know, it's the same concept, right? If I know how to look at the chart and I know how to read where liquidity is, where the imbalances are, then I can trade it, right? I just have to understand if I take my trade based on this 15-minute chart, I also have to pick my targets based on this 15-minute chart. If I take my trade based on a higher time frame chart, then I can target the higher time frame areas of liquidity or areas, you know, highs and lows or whatever. But you have to understand that, you know, as the trader. Anybody have any questions?
Can you go back to GJ for a moment?
What, GJ?
GJ. So I was looking on the 2 hour on GJ, and I found the three soldiers that we've been practicing with.
You talk about candlestick patterns? Be like,
Yes. Yes. Isn't that what it's called? Three soldiers?
but I mean, yeah, Morning Star, three soldiers, there's a lot of candlestick patterns. I'm not, I think OG is more familiar with the actual candlesticks than I am. I'm more concerned about market structure. Expansion, consolidation, pullback, expansion. But what was the question?
My question is the fib. I'm trying to place my fib on it, and I was wondering if I put my fib on that second, when I'm looking at the three soldiers on the second one, or that first.
If you're trading on a lower time frame, and I'm assuming that you're trading on a lower time frame, if you're starting your analysis off with this 2 hour candle, so you have to take this entire impulse move, right? The move starts right here. You got an impulse move up. This impulse move breaks this high, right?
Right.
And now you're getting a pullback. So you want to fib this entire impulse move.
Okay. So when I fib the entire move, it hit the it like touched the 50.
Okay. Which is cool. The 50 is, what does that mean to you?
Well, I know in previous places I've been, that's been like the golden zone.
It is. It's called the golden zone, which means what?
That the price, that's where you're looking for price to go go in the direction that you want it to go.
Okay. So more importantly, if you're looking at this on a 2 hour, you have to drop down, right?
Right.
You don't want to stay on the 2 hour, because this is your trade setup is on the 2 hour, which means you have to drop down at least 2 time frames to find an entry, correct?
Okay.
Did you know that?
No, I didn't know that.
So since the 2 hour, you want to at least be on the 15 minute, right? So let's just look at the 15 minute. Let's start with the 15 minute. And what I want to do, if I drop down here to the 15 minute, I know price came down to this level. I want to make sure that I'm not missing any imbalances, right? Because even though it hit the 50, sometimes price will hit the 50. You see how this is an imbalance right here?
Right.
So maybe price is just pulling back to this imbalance and it's going to push further down. Or maybe price is pulling to this imbalance and it'll push further down, right? Because the same way you're looking at this entire move is your impulse move and a pullback. Well, on the way down, price is not just going straight down. It's going to go down, pull back, go down, pull back. And if you look, it went all the way down and it hasn't pulled back. This is the first pullback. So if you fib from here to here, your 50 is going to be somewhere around here. Your 78 will probably be right here where this imbalance is. So if you're taking this trade up, in my opinion, you have to look to take profit, around this level. And then maybe see if price is going to turn around or if it's going to keep going. Does that make sense?
It does. Thank you. Appreciate it.
Can I ask a question?
Sure.
So if you're looking at the 2 hour, would you have already determined what is the overall trend, so that when you go down to the 2, you're looking to, I mean, I guess if you do a counter trend, then that's okay, but you're still, I mean, in my mind, I'm thinking, well, what is the overall trend? What is the larger trend of the market? So I can actually
Yeah,
then decide.
That's a great point. Now, who was just talking about the 2 hour?
I was.
Okay, Tony, do you know the overall trend?
Do I know what the overall trend is?
Right.
The overall trend is bullish.
And where did you get your bias from?
I looked at the, well, I've been following you guys in the 6 month. I looked at the 2 hour. If I look back, I can tell that it's going up.
But okay, I hear you, and you're following us. But if for you to do your
I mean, I see, I mean, when I'm looking at the 2 hour, I can see that there are higher highs.
okay, that'll work. But in my opinion, everybody, you shouldn't just start on the 2 hour. And I don't think you did. You're saying you can see the higher highs, which is perfectly fine. But you should always look up. You know, if I'm going to take a trade on the 2 hour, I want to know what the 4 hour is saying, right? I'm taking a trade on the 4 hour, I need to know what the daily is saying. So that way you're not going to get clipped. You know, if the daily is bearish and I'm buying on the 4 hour, depending on how far I try to buy it, I'm going to get road rage. The daily is going to run me over. So you want to be cognizant of what's going on the higher time frame on this 4 hour chart, right? So when you look at this 4 hour, the 4 hour, you have a wick past that, which is cool, which is a structure break, but I'm only gonna sell this, you know, to this 50 or to the 78, and then I'm going to look for either a bullish move or whether this price is going to come down and break this swing low, right? So price on this 4 hour is either going to break this low or it's going to break this high. But anywhere in between here on the lower time frame, I can take the trade, and I understand that I'm trading a pullback on this within this 4 hour move. So if I'm on the 2 hour and I'm selling it, it's fine. I know I'm just selling it down into this. Does that make sense?
Yes.
Okay, so time frame correlation is probably the hardest thing for a newer trader to get. But you know, in the context of the question that I was asked, you know, I think, Tony, I think you did it right. You know, you put your fib on it. Price did touch your 50, but you just have to see whether this is a pullback to close this imbalance right here, or if price is going to go higher from this point, just from touching the 50. Once price gets to the 50, it's considered a discounted rate, and you can look to trade it higher. But you know, in my opinion, and the way I like to trade is I want to see a deeper pullback. You know, 618, 78. I feel better about taking a trade. As a matter of fact, I'm probably not going to take a buy along if it just pulls back to the 50.
That's a great point. I mean, a lot of people, we have this discussion a lot, and you will be a lot safer if you don't even start until it gets to the 61. 78 is the best case scenario. So really consider that and keep yourself out of trouble. If it doesn't do it, it doesn't do it. Wait till you get something that does, and you save capital, save headache, all that.
What do you mean by start until you get to the 61? Like, don't get in for a buy until you get to the 61?
Right. So we've been having this discussion about where to put the stop loss. And a lot of people won't take a 61 because they're going to have to put the stop loss below the bottom of the structure. That's how it's taught, right? That's where you want to put your stop loss. But If you use a lot size that doesn't hurt, it really won't matter. But if you're going to want to use a lot size that a lot of people want to use, and we want to call them immaculate lot sizes, right? If you're going to get in at the 61, if you're going to get in at the 61, this is what I've come up with. You put your stop loss at the 78. And if you get in at the 78, you put your stop loss at the 88, because your intention is that that's what it is. And it doesn't, nothing's going to be 100%. But if you're not wanting to put your stop loss below the structure because it's too wide, and you don't want to take that big of a hit, well, your intention is that you're getting in at the 61 and you're calling it a 61. So if you're calling it a 61, you have to stand on your word, take the 61 and put the stop loss at the 78. If you get in at the 78, call it a 78. That's the intention of the trade. Then put the stop loss at the 88 and you walk away from it. It'll minimize the loss.
Makes sense.
That's for people who want to use the lot size and not walk into the trade. I think you should walk into the trade and have the trade confirmed. So what I mean by that is when it hits the 68 or 61, and it is a 61, then it's going to give you a bullish order block and it's going to curl around and come and tap you in on that 61. If it's a 78, it's going to create a bullish order block off the 78 and come around and tap you in after it's confirmed that it is a buy off the 78. So I can use a 0.25 in this scenario. This is how I do it anyway. I'm always going to use a 0.25 until it confirms that the move is correct. And then I'm going to put a standard lot on the tap in. And all my stop losses are going to be at the next percentage level. So if I'm at the 61, my stop loss is going to be at the 78. If I'm at the 78, my stop loss is going to be at the 88.
Oh, gee, she said it did tap around right here.
Yeah, I mean, it's an awesome move.
That's a great trade. But
yeah,
the only problem with this trade is where are you taking it to?
Right.
But it didn't break any levels of structure after the tap in. Like you said, it could go fill that imbalance.
or
go fill that imbalance right there and continue to the downside.
Or it could go right here. Yeah, right. Like
yeah, that's what I'm saying. It can go there.
Where are you taking the trade? That's the question, or that's what we have to understand as a trader, right? If you're taking this trade, this bounce, this is as high as you can take it. I mean, maybe it'll go up here, but if you're just taking this trade, you know, I mean, that's almost 3%, or it probably is 3% if you move this up. So that's a 4% trade and it's 17 pips. So this would have worked, right? See how it gave you the order block and it curled around on the 2 hour. Like if you're on the 2 hour, this is why you drop down time frames, because the 2 hour just looks like a mess, but you're at least going to drop down 2 time frames for your entry, right? And what OG said was, if this is your trade, it's going to give you the order block, right? It goes up, it breaks these highs, comes back and taps you in. So it did break structure. It gave you your chalk by breaking this high. Comes back, it taps you in. The question is, where are you trying to buy this up? You can't buy this all the way up here. You just have to buy it to this first level, right? Because maybe it'll go and it'll break this first level, or maybe it just go to this first level and then keep pushing down. Does everybody see that?
Because what is that, a 1 hour order block?
No, this is a 15-minute order block.
No.
You're talking about the rest of the candles. Yeah.
Let me see.
Yeah, I don't you know all order blocks are not created equal for me, but
they're not created equal. But all if you're taking this trade, you're taking it to fill this, to close an imbalance. That's it.
Correct, but it can only do 50% of that imbalance, and then go start to selling back down.
Well, I don't disagree. I don't disagree. But this is why I wouldn't take a 50% pullback. But it doesn't mean that it's wrong. And the fact that this trade is in profit, it's not a bad trade.
Correct. I
NC
agree.
was a good example of it. It was a small from last week. It was it did the same thing. It was only like 50 pips. To the golden zone, and it just filled that imbalance. It's
I think this trade is going to go to this level.
That's what NC did last week.
It's highly risky in my opinion, but if you trade these lower time frames, I mean, all you need is these 15 pips.
You gotta ask yourself, are you a scalper? Because if you're a scalper, you have to scalp that. You can't think you're going to get 100 pips out of that move. You're at the 50. You're just going to put yourself into a lot of stress. And a lot of people here don't want that stress, but they keep going for the stressful trade.
Yeah, this is definitely not a swing trader or even an intraday trader setup, in my opinion. This is definitely a scalper setup. But I mean, it works. It's beautiful. So Tony, if you took this trade setup based off that 2-hour chart, right? Because I mean, that you gave me the 2-hour setup. That the important thing is if your setup came from this 2-hour chart, right? If this was your setup, then when you drop down to that 15-minute and you took that buy, you can't expect for this thing to go from here to this -27. It might, but you have to take it one trade, like one level at a time, right? Do you understand that?
Right. I was actually waiting. I know it touched the 50, but I was actually waiting for it to go to the 78. But I was wondering where to set my fib at.
Okay. So I think we talked about,
Yeah.
Here. Okay, cool. Do we have any scalpers? I seem like I ask it every week and nobody ever says they're a scalper. So, with that, nobody would have taken this trade. I don't think. Hey, I mean, we don't have any scalpers, right?
Yeah, we do. They don't want to say it. They don't want to say it. Go ahead, say it. We got at least 10 in here. They got closet scalpers.
Yeah, who's scalping? Why y'all ain't got to be embarrassed? I mean,
they're not good scalpers, but they're scalpers.
I'm a scalper, but I plan on changing that because it's been too stressful.
Well, listen. What do you have a successful scalping strategy? Like, is this a setup?
Yeah, because I'm still kind of new. So what I do, like, for example, for that trade, if it was on the 15-minute, I would wait for like I wouldn't wait for a 50-minute retracement. I would wait for the 61 or 78, and then I would enter when it breaks that high on the left right there.
When it breaks,
and then I would take it to the -27.
Or you enter when it breaks this high?
Not that far. Right there at the top with the green bar and the red bar was starting to go down, up. Right above the 23, yeah. So when it's going back up, when it breaks that high, I would take it to the -27.
Right here?
Yeah, and get out.
Damn, but listen, if
You could trade it on the lower time frame.
She said she was a scalper, so that would be a scalper play.
But hold on, Kim. Hold on, y'all. Hold on.
She said that's how she trades.
Yes.
Alicia.
Cause you know me, I go to 5 minutes. I trade that. I
stop the madness. Stop. Stop. I want y'all to listen. Stop. Stop. Stop.
Y'all are being disingenuous.
Hey,
we on the right track now.
Hey, yeah, they being disingenuous. Y'all, come on, y'all. Let's talk about this for a minute. Did you just say you was gonna wait till it pull back to the 61, right?
Yes, but I would be on the 15-minute chart.
Okay, but hold up. Let's talk about this. If this
Okay.
trade pulls back to the 61, why the hell wouldn't you get in down here? Why are you waiting until it breaks this high?
It seems safer for me. That's
Is
like
what?
for me, it feels safer to just wait. Cause like I won't know. I'm not 100% sure because I'm still figuring this out. But for
That
me,
gives me
it just
high
feels
blood pressure. That's giving me high. Listen, listen. Hey, hold up, man. What this sounds like to me, you're waiting until like the pullback is confirming, like this is a pullback that closes an imbalance. Now it starts to go up. Now you're going to have all kinds of confirmations, especially on the lower time frames, by it breaking those lower highs. If it pulls back to the 61, it's going to go up and break a high the same way that price went up and broke this high on the 15-minute the first time. It broke this high. This is confirmation, or this is proof that price is going up. It broke this high. It broke the swing high. This is the swing high on the 15-minute. So it breaks this high. It pulls
back.
It lets you in the trade. There's your entry.
And you stop at that fair value gap. Well, I don't see
You
why
stop right here.
this is a bad trade. No, I'll go a little bit higher.
Well, listen.
No, I don't think it's
you
going
have
that
to
high.
stop here. This is the level you have to stop. And really,
Yeah.
the safety spot would be where this comes down.
Yeah, that's the safety spot.
Yeah. So, but my point is, it's a valid trade. It's over 3%. It's a 1 to 3. This is a good trade for a scalper, right? So I guess my concern is if you're scalping and you get the same move from the 61, ain't no scalper gonna let all these pips walk and then get in up here. That to me, no, that's not how it worked to me. Because I mean, even a swing trader, a day trader, we're getting the trade down here when we break structure. If I'm looking at this on the 4 hour and I'm gonna drop down to the 15-minute and look for this same break to get into this trade, but I'm just holding it until it gets way up here. The scalpers this is a trade they in. Bam, they got their money, boom, they got 3.5% right here. Boom.
And once you get a swing high break of structure, then once it pulls back to the 618, 78 or 88, wherever it's going to pull back to, right? And you start getting the swing high breaks of structure, that's when you can get in and then take it to your negative 27. So now you have, I don't know how many pips it is from where you would have waited for it to get in to where it pulled back to the negative 27, but that would have been that would be an optimal, that would be the optimal trade and entry to then take it to the negative 27.
So when I fib, of course I still do the higher analysis, but I fib on the 15 and I'll look for entry on the 5.
Okay. But I don't disagree with what you're doing. But if you fib this move right here, like if you fib and you look for an entry on the 5, you would have got an entry on the 5-minute for this push down, right?
Let's talk
show
me?
Yeah, okay. I'll show you. So
I think she fibbed I don't think she fibbed the move down. I think she fibbed the move up.
Okay, but this is still not the right thing in my opinion. This is what I'm talking about. It doesn't matter what time frame we're on, right? All we're waiting on is breaks of structure. Like you're on the 15-minute, these wicks are structured. Especially if you drop to the 5, you're gonna see lows. These are lows. We broke these lows, right? We wicked out, price came right back up. This would have been an entry. So you could have fibbed here to here. This is your pullback, the negative 27.
Okay, let's see.
here to here. What pullback is that? 78. Negative 27 is right here.
Mm-hmm.
So if we're not doing it like that, it doesn't matter what time frame we're on. This is the same in every time frame. You're waiting for a break. And when this pushed down, it broke this structure. There's a structure right there. It broke it.
Okay. Now, so you fib that. So you see that down, up. So you see that green bar to
This
the
one?
left of the big red one? Yes. So it pulled up. So when that red bar broke past that, that's when I would like,
Kenzetta,
yes.
you're missing your opportunities.
Okay.
And this is what I'm telling you. This is what I'm trying to show you.
Okay.
Here's an order block, right?
Mm-hmm.
Price pushes down. We break a level of structure. You see the structure? I just want to label where the structure is. Below this green wick is a level of structure, right?
Mm-hmm.
This red candle break structure. You see it? This wick on this red candle break structure.
Yes.
Price goes back up to this point. There's an entry. Price pushes down. There's no structure breaking, so there's no trade. It pulls back. Price pushes down, it breaks the structure right here. You see this? Do you see this wick on this candle?
Mm-hmm.
That's structure. We broke it. Price pulls back. There's an entry. That's an entry.
Oh, okay. I see it now.
Price pushes down. We broke this structure. Price pushes down. It's probably going to break this structure. But even if you had taken this trade from here down, that's hella profit on the 5 minute.
Okay, I see it now.
It's going to pull back again and give you another entry. And we're looking at this on the 15-minute chart, but if you're on the hour or the 2 hour, like we looked at this on the 2 hour. 2 hours what tells you, hey man, price is pulling back to at least the golden zone. So you can take all these trades down at least into the golden zone.
Mm-hmm.
Right? So
yeah.
this is what I mean by if you're scalping, you got to know your time frame. I don't know why this thing does that. So you understand that we're pushing down to the golden zone. So on the 15-minute chart, every time you break structure on the 15-minute and it pull back, that's an entry. Pull back, that's an entry. So you can do this and walk it down right to that golden zone. Right? So you would have had, maybe you had entered up here at this order block, there's an entry. You would have entered, it have broke those lows and pulled back, entry number 2. Broke that low, pulled back, entry number 3. And you got 3 entries down to this golden zone. Money. They all work. All 3 of those entries would have paid you down here to this golden zone. Does that make sense?
Yes. I don't know why I didn't see that.
Well, it's just
that's what the group is for. That's what the group is for. We have to come in and have these conversations, get you fine-tuned because you do know what you're doing. It's
Right.
just that you're late, and we're gonna get you to not be late and get you on time with it.
Right. So
And I just want to play devil's advocate here because I'm until I knew how to trade the trend, trading the counter trend, and they'll tell you I don't. I'm a person that I can trade the counter trend. I know how to trade the counter trend, but for somebody who's beginning, because that's when people get confused or lost in the chart. If you trade the trend, and if you can wait for that pullback and then wait for the break of structure, and I'm talking to for those who are beginning, then you won't get lost in the charts. and expect a full sell down to wherever. But if I could say, wait for the pullback, and then once you get to one of the optimal trading entries and you see swing highs being broken, then you can get in for the continuation of the move. What I do know about the market and is that when you're trading the trend, like that pullback is a little meander. It's meandering back. That's one of Ty's bingo words. So if you hear it, play bingo. It'll meander back, but when you're trading the trend and you get in at the optimal trading entry, price is going to move swiftly. So it's not going to meander. It's going to move quickly. So, but I just say this, specifically for the beginners, because it was a tough thing for me trading the counter trend. Once you learn to trade the trend, then you'll understand better how to trade the counter trend. That's all I'm gonna say. That's all I have to say.
Appreciate it. So let's talk about the trend. If you're trading, it doesn't matter, in my opinion, what time frame you're on. But we can talk about trading the trend. The trend was an uptrend. Price pushed up, broke this level, pulled back to basically your 78.
Yep.
And you're saying you're entering on the 5-minute, right?
Yes.
So on this 5-minute, you're waiting for a break of structure, right? Either this first level right here, or maybe you're conservative. But if you're a scalper, I don't want to really hear about conservative. That's a damn lie. So waiting for a break of this level and a pullback. Okay, so in this case, this probably would have been your first entry right here. This bullish order block, right?
Yeah, because it broke and then that red candle pulled back and then the green candle.
Yeah, this gave you your 5-minute order block and you're tapped in. So you could have got an entry here, stop loss under here. Now you're trading the trend. So if you're trading the trend,
And so would I take it negative 27?
Well, yeah, you should. I mean, if you're trading a trend, but to me, the trend is different. I mean, you could just take it your first entry here, but it's the reason why I use the moving average. Kim uses a trend line, but on the higher time frames, you should have an idea of where you're taking this trade, right? So if you looked at this on the 4-hour, right, and you're bullish on GJ, right? You're taking GJ past these highs, right? Which would be above your negative 27. But if you're trading a trend, really your trend line or your moving averages, you're just going to keep buying it until you break your moving averages, right? So every time it pulls back to your moving average, you get another buy entry and price pushes up. So every time it pulls back, you get another buy entry until it breaks your moving average. Then you close your trades out. You're going to be heavy in profit. You should be heavy in profit if you're doing it properly, right? In this case, your negative 27 is here. So you would have been safe to take all of your trades to this negative 27. Now, if you add any entries, right? If you would have entered right here, then the first break, the first candle that closes below your moving average is when you close out any of your buy trades.
So my thing is when I enter, so let's say I entered where you told me to enter, I would just hold it until it hits the negative 27.
Well, I know.
But the reason why, so you see that double top over there? Like my thing is like, how do I know it's gonna break?
This double top? This double top? Can y'all hear me?
I think we lost her for a minute. I think we lost her.
That's why I would have waited until it broke that double top
No,
and then
no. That's why you have a higher.
maybe that's because
You're trading the trend, and you have a higher time frame.
maybe I'm not.
Kanzetta.
She came from support
You-
and resistance, so that makes sense to let structure break and then get in.
Well,
Yeah, and then I
But
would
she's
get
having
out.
to relearn.
I disagree. Listen, I disagree 100,000%, and this is why this is why we're having the conversation. If you are the reason why we use higher time frames first is to understand the direction of the trade. We're not just dropping on the 5-minute chart taking trades, guys. That's not it. What we're doing is we're taking an analysis. We're taking a trade idea. We're basing it off of our higher time frames, right? If I'm on the daily charts and I got a daily order block that says we're going up, which good googly moogly, we're going to go up, right? If I have an idea that we're pushing up 300 pips, I can trade up on this 5-minute chart for days, guys. Like for days, I can trade on up. And when I see a 4-hour pullback, when I see this pullback right here, I'm getting in a damn trade to go up. Yeah, we're breaking these highs because this is a pullback on the higher time frame. We already broke these highs. This push up, it's not a push up on the 5-minute chart, guys. It's at least go to your hour. Did you break structure on that 1 hour? Did that push up break structure on this 1 hour chart before it pulled back? Can I get a hell yeah? It did.
That's my issue, meshing, like seeing, like I go to the higher time frames, but like I don't think I quite fully understand how they all mesh together. I feel like I would have to like look at the chart, the time frame I'm trading, and like the daily or the 1 hour at the same time for me to fully
So
grasp.
Todd, can you squeeze that chart in just a little bit? Okay, see where oh, not that far. Okay, Ty.
What do you want me to do?
Squeeze in just a little bit.
Then
Okay, right there. Right there is good. Right there. Okay. You see the last swing low underneath the G, right?
Yes, right there.
That wasn't where it was. That wasn't the Todd moved the screen.
Yeah.
Yeah. So, and I'm just trying to explain to her. So you see how you're getting all the higher lows. Let me put it that way. So there's a higher low before that. And as long as price is breaking structure, when it pulls back and not breaking any of those lows, your thought process should be that it's going to continue in the direction that it's going. It's going to continue creating higher lows and higher highs, right? So once that low that he just marked up, and then there's the high right there by the Y, by the JPY, right? And then it pulled back and did not break the low, and then once it starts breaking structure to the top side, breaking swing highs, then the thought process for me is that it's going to start continuing to the top side. So you have an impulse move, the pullback would be a correction, and then you'll have a continuation move. So as long as price is not breaking the higher lows, once you get the pullback, which was the correction, it pulled back to, that's probably the 78, or I think it might be the 78, 61878. Right there. And then it started breaking structure to the top side. So it was right at the 78, or is that the 88? That's the 88. Or is that 78?
78.
That's the 78. Okay. Yep. So it tapped into the 78, and then it moved up. For me, it didn't break structure yet, but then it pulled back, right?
Mm-hmm.
And then in that move up, it broke structure. So now you can fib that move. That was the break. That was a break for me. That would be a break for me. It pushed up, pulled back, all that meandering back, and then it started moving back up again. So I would definitely say at that point, you can definitely take it to your negative 27, or probably, and see, it still hasn't broken those highs yet. It's probably going to tap into the negative 61. Why you have 100 up there? Okay. But yeah,
It's
but
either
those are minor. That move he just fibbed, the last move he just fibbed, are minor levels. So, and that's, more for intraday, even scalping moves. But the last fib that he did is more of a major move. So
it's a
that
high
tap,
time frame fib.
yeah, that's a higher time frame fib.
It's a fib from this 4 hour high. The pullback is 78. You're expecting price to touch the negative 27, right?
Yep.
If I put a line across here, we've broken structure, right? With this wick, we've broken structure. So we're expecting price to push up, right? So if it doesn't, if for whatever reason we come up just to this level that I had this line mark, if price just pushes up to this level and pushes down, it still needs to break this low before it's confirmed that price is going to sell from this point.
Yeah, that makes sense.
So this is your high, this is your low. Until price close, you get a candle close above or below, you're bullish. And as a scalper, you could have ran a bag up, trading that up, and scalping it down. You're just, the only reason I fibbed this move right here was on that 2 hour, right? We had talked about that 2 hour, because you can trade any time frame, but you understand that this pullback, you're scalping the pullback, so you can scalp it to the 50%. Scalpers, it kind of, I don't know. Kim give me a headache when she talked about counter trend trading for a scalper.
No, I'm just saying,
a scalper gonna collect money regardless, irregardless.
No, I'm just saying that for me, it made a difference in my trading.
Well, I think I don't think it should make a difference in a scalper's trade. I think a scalper needs to be able to do it either direction, because it's a small move and it's a fraction, it's a fragment of time.
You just got to get your take profit level right.
Right. If you're scalping 5 and 15 minute, you're just scalping to the imbalance or to the next little order block. 15, 17 pips. Easy money. Should be easy money.
That makes sense. Because I had a feeling I was holding when I was scalping, I always felt like I was holding my trades too long, because I was trying to I was holding them too long. So I would hold them and then it would pull back, and then I would get scared, and it would go on the pullbacks, I would get scared. So that's why I was like, I probably, I like scalping, but I probably might change that, because it's stressful.
And lately I've been wanting to get more into scalping.
I feel like I feel more secure doing I can't remember his name, but he'll say get a lot size that doesn't hurt, and I'll set my stop loss, and I'll hold my trade. I'll probably hold it for I think I want to hold it for a day or two maybe. Like that's just less stressful for me. With scalping is like you are on the chart, like, whew, it's stressful.
But Todd, I have to disagree with you because I still feel like even as a scalper, if you're still trading the trend, like I still think that's when you're the most profitable, even if it's only 10, 20 pips. You know what I'm saying? But I mean, that's just me. That's my thought. That's my thought for today.
Yeah, hey, we have to agree to disagree. And I think that dude's name is Orenthal James Simpson. OJ.
I remember him for some reason.
Who ITI is?
So I mean, it's all good. Does anybody have any questions? And you know, I think the trend is important if you're taking the longer trades. But you know, if you know what time frame you're on it and know where you're trading to, whether you're trading a pullback or you're trading, I mean, that's really the reason why we get on at 5 o'clock to understand where in the move we are if we're taking those moves during the week. Because sometimes during the week it does an impulse move, and then the next day it's doing a pullback. That's why we talk about it at 5 p.m. But you know, to me, I think the group is small enough to where we can pop on Zoom or we can have a conversation in one of those rooms and say, hey man, you know, this is a trade I'm looking at. What do y'all think? Or, you know, maybe somebody else is in that trade and they can get us on the right track.
And it's like being in a workout setting, and you have the person up front leading people through the workout, and you have great people in there, and you can tell their bodies are getting better and all that, but they can't quite lead the group quite yet. They know how to do everything, but they always need that leadership role to keep them on track, right? Until they graduate into it, until they really are able to tell themselves the thing that the instructor's telling them. Like they know it, they see it, but it falls off the frame of mind, if you want to call it that, like about that swing low until that swing low is broken. Like people keep saying they understand that, but do they really? Because if they did, they would have less problems. They wouldn't jump out of the trade. They won't let the thing pull back to the point where it scares you out of the trade. You're forgetting why you took the trade in the first place. You can't forget why you took the trade. You have to have intention with the trade. We have conversations with people sometimes and we're like, okay, well, why did you take the trade? Well, I forgot.
And see, that's why, and that's why I say, that's why I say that when it made a difference for me, in knowing where I was on the chart, if I just started trading the trend, like I said, I can trade a counter trend, but what made a difference for me is when I understood the trend and stayed with the trend. And then I knew where I was in the chart of the count, you know what I'm saying, of the counter trend.
Yeah.
Yeah.
And the candles are telling you a story and you're just reading it. You can make money in both directions. It's stressful, but it's doable, right? You got to know where everything is. That's the beauty of the group, that we'll continue to have conversations about everything, what we see, what is it saying, what is it telling you, everything.
But you know, something Sean brought up too. If you understand your candlesticks, you know, like we're on a 15-minute chart, so that means 4 of these candlesticks is a 1-hour candle. So maybe you're not tracking what time frame it is, right? But if you count these candlesticks, right, every 4 candlesticks is a 1-hour candlestick. So basically, this up move is an hour and a half worth of candles. So we know that this, if we went out to the hour, we're at least going to have 1 candle up and 1 candle down. So I think that even if you don't understand how to toggle between your time frames, if you're just cognizant that on this time frame, 4 candles make makes a higher time frame. And
So you have 2 order blocks right there.
right, you can get a picture of what the higher time frame looks like without actually clicking to go see the higher time frame.
That's top shelf, top shelf. I do it backwards. I do it from the higher time frame. I think of every 15 minutes. I don't think of them as candles. I just think of them as increments. Yeah, I do it backwards.
Right. I just think that you have to use whatever, because we're all different, you know, when it comes to learning, and even when we see things visually, our mind breaks things down, you know, a little bit differently. So for me, you know, I see it one way, the way I see it, you know, Kim sees it the way she sees it. You guys are going to have to figure out what makes sense, you know, when you look at this kind of thing. And you know, Kim is telling the truth when it comes to trading the trend. You know, it's just, I think that we should all be able to trade either direction, because we understand that the market impulses and it pulls back. So it doesn't matter what we're trading. You know, a pullback is still a pullback. You just trading it to the next level. You know, if you lose a trade, you're like, hey man, I lost. It didn't pull back as far as I thought it was pulling back. Okay, I mean, you know, it's a loss. We're going to lose on trades that go with the trend. We're going to lose on trades that go counter trend. The big ticket item here is, do you understand where you're taking your trade to? Do you understand where the liquidity is? The liquidity is going to dictate where the market goes. You can't trade past the liquidity. You can't take a trade past the liquidity, because the market is going to the liquidity. They're going to other people's stop losses. And if you understand how to pick out where other people's stop losses are, then you understand how to pick out the trade. If you see that this is a level of support, you know, if Kim and her gang is using this as a level of support, you already know that me and my gang are waiting until they take Kim's gang out with all this support before I get in the trade. You know what I'm saying? So if you understand where the liquidity is, you can trade, right? You get this trend line going up. Everybody named Mama knows this is a trend line. You know it's going to get broken. So you just have to kind of understand the game, like what's going on. Right here on this lower time frame, if you see this consolidation, you're like, God dog, man, what's going on? It's Wyckoff, man. This is all it's doing is manipulating these lows down here, right? It gives you your low. This is the bottom of the market. Then it comes down and it gives you equal lows, and then it trends your lows up. And before you go up, whoop, it drops down and takes out everybody who was trading this trend line right here.
Drops down to the orders.
Yep. So this was the bottom of the market. You got in here, you're fine. Anybody else who came late to the party and got in and put their stop losses down here, because they know it's going to go up to break these highs, guess what? Whoop, we'll take y'all out the trade, and we'll go right up past all these highs to let you know that we broke this level, pull back, let you in the trade again, and then we'll push up. So it's just a matter of gaining an understanding of the market, you know, and how it moves. Again, if you study that ICT stuff, all this stuff will be revealed, right? And until you get to the level you need to be, if you're trading an uptrend and then you come to a level of consolidation and you don't like it, don't freaking trade it. Don't press the button. If you're saying, hey man, on the 4-hour time frame, we got this up move and it pulled back to the 78. I got in the trade and it's not moving. Well, you already got your stop loss on the 78. You got either put your stop loss below this structure, or you put your stop loss somewhere down here at the 88, like OG was talking about. So you don't worry about this. I mean, who cares what the market is doing? It didn't stop you out. You don't have to look at the trade. But anybody else who got in late after this 78, your stop loss should have still been below the 78. But if you don't understand structure and you don't understand what you're looking at, you just jump in here on the 15-minute and you get in and you're paying attention to this noise, maybe you got an entry here and you put your stop loss here because you wanted to use those, what kind of lot size that was, OG?
It's immaculate.
Yeah, you had to use an immaculate lot size. Now you
The Lambo lot size.
yeah, now you got your feelings hurt because you didn't put your stop loss where you needed to put your stop loss because you were a little late to the party and you couldn't use your immaculate lot size. At the end of the day, the trade setup was perfect. Your entry may not have been ideal, but you could have still taken it. It's still this entry is still below the 61. So this would have still been a great entry for up move at the end of the day. If you're taking this trade from the 65 to the negative 27, it's still a good trade. But because you got cute with your lot size, you got taken out the trade. So to me, you just have to understand where you are, and you don't understand until you look at the higher time frames. Any other questions?
I have one more question.
Yes, ma'am.
So it's about drawing the fibs. So let's say the overall trend is an uptrend. Does that mean you should always be drawing your fib from the swing low to the high?
Well, no, but yeah, if you're measuring an up move in a pullback, but sometimes you can still counter trend measure a down move and see where a pullback is going. But generally,
I think the answer to that is what direction are you trying to trade it?
Like the trend.
Yeah, so if you're trying to trade up, then yes, you probably should be fibbing the up candles and the pullbacks. If you're trying to do a counter trend, then you gotta start at the swing high down to whatever swing low and measure that pullback. I think that's really the right answer.
Okay, because with me, I tend to go with trend because it's just less confusing for me.
You tend
so
to go.
That's why I asked.
Okay.
And I was going to say, and I think it also depends on, like you said, the type of trader that you are. If you're doing, if you're scalping, like you're not going to go from the macro swing low to the macro swing high. You will just do all the minor swings in between.
Mm-hmm.
Hey, Kim, I think macro is a bad word.
You think who?
I think you should use like 12th grade English.
Okay, major or minor.
Well, hey, look, I'm not talking about you, Kim.
Hold on.
I'm not talking about you, Kim. I'm talking about for the good
This cat right here.
You never know who's going to watch these videos. I listen. I can appreciate the macro and micro, but there's a microeconomics and macroeconomics. People never really.
Macro and major is the same. Minor and micro is the same.
So when she said micro, that's when I said, okay.
You said what?
Macro. But
so the minor levels. So the major is the higher time frame moves. For instance, the major on this GBP GJ pair would be from the low that is out of the screen. Can you push your screen up? Can you push your chart up a little bit? And then all the minor swings would be all the pullbacks and then breaks of structure, or like where he has his red line, the swing lows to the next swing high. So that was a low, that was the high, and then that was a low, and then that's the high. So you can fib those minor moves if you're just trading, if you're scalping or day trading.
Okay.
Yeah,
Thank you.
you're welcome.
I think these are good discussions. You know, actually, they're great discussions. But sometimes we forget that we're not the only people that are going to see the videos, and a lot of times people get tripped up by the wordplay.
Mhm.
You know, that's why I wanted to say micro and macro are bad, you know.
My bad.
Well, I'm just saying, you know, like some people probably they weren't gonna get it by you saying that, even though, you know, there's Google and stuff like that. A lot of times people will miss it. All right, do we have any other questions or other pair that people want to look at?
I do, Todd, but I just don't want you to yell at me when I ask you.
I'm not gonna say, you know what, somebody pulled my
Selena.
coattail. Somebody pulled my coattail to yelling at you. So what would you like to look at, ma'am?
I cannot stand you. I want you to look at two just for GP. I want you to look at UJ, and I know there's US news next week. But I want you to look at NZD CAD first, because when I was doing the additional order blocks, if you go to the 2 month, if you start there for me, sir.
Yes, ma'am.
Oh my gosh. You're gonna get on my last nerves. So you see it tapped into, it tapped into that bullish order block. So we missed the first entry, but I just wanted you to talk through it in your thoughts, because it went down, it tapped into the bullish order block. And I think I may have missed this on the 2 week. It may be a 2 week order block as well, but I really do think this is a good pair to think about trading. But I just wanted, you know, the group's thought on what I saw.
So you think it's buying?
Yeah, if
You
he
think
filled that 2 month order block, I think it tapped into well, it definitely tapped into the order block, but I can't remember exactly where it tapped into as far as the fib is concerned. Okay, so it did tap into the golden zone. So, and then I think there was also a 2 week bullish order block. No. It was
pretty bearish to
a
me.
bearish order block. Okay, it was a bearish order block. But I still feel like that. That's why I wanted you to talk through it, because a part of me believes that this is still going to buy up, even if it buys up just to clear that imbalance. Or it could. I just wanted somebody else's thought, because I couldn't really tell either way which way it was going. But I did like the fact that it had tapped in on that 2 week bullish order block for the buy.
I don't like it.
Okay.
That's a bunch of distribution. Okay, so you see how every time the market goes over the top, right? Over the top, over the top, over the top. Consolidation across the top is called distribution. That's supply. So every time it does a supply, it drops considerably. So the opposite of distribution in supply is demand. Supply and demand. Demand is consolidation across the bottom. And distribution is consolidation across the top. So if we just viewed it like that, and those are Wyckoff terms, whenever it goes bearish and curls, right? Curls is accumulation across the bottom. There's no bullishness. This is the reason why we're getting a high, a lower high, a lower high, a lower high. Every time we have those highs, it's curling over the top. And right now it's going bullish on this chart, but it's going to curl again, right? It's redistribution, redistribution, redistribution. That's about it. You're not getting any type of solid accumulation. The last true accumulation was down at the bottom. Because when it's a true accumulation, you see how bullish it went. It totally stopped doing that. Now, this will be, like we say, like talking about micro and macro, when we're talking about distribution and accumulation. Distribution has totally taken over. That's why we're getting lower highs and lower lows. And until that pivots, every time it tries to go bullish, the bears totally destroyed the bulls. And it hasn't shown any signs, any strong signs of bullishness. And it starts there, right?
So,
how many?
So I think her thought process behind that it's going to buy is that price. Can you squeeze the chart in a little bit? And there you go. So the last swing low high, lower high. No, not that one. To the left. Everything you own in a box to the left, right there. That price broke that swing high. So now price is pulling back to an optimal trading entry. It hasn't broken. Yeah, and broke.
I think it needs to come down though.
No, and that's what I'm saying. That's what I'm saying. It is pulling back. It just hasn't broken structure to the top side yet. There's imbalance
Right
a
here.
little. You're on that in that 2 week right there. So price may pull back into there. I would say for now, you can definitely just sell down, at least probably down to that point. But once price gets there, then you'll be looking for, if it's going to break to the top side, if it's going to buy, you'll start looking for breaks of structure in that area to the top side. If it's not going to break, then it's going to continue selling to the downside.
Hey, Alicia.
Yeah.
Are you quiet?
I couldn't get off mute, and then somebody called, and I was trying to hang up on them
What'd you say about ICT's breaker block?
What'd you say?
It's at a 2 week breaker block.
Yeah.
So it's like when price clear. I'm on the phone. Go ahead. It's at a when price.
Wouldn't this be the top of the breaker block?
Yeah, that's the breaker block. That's
so
what it's in right now.
Shouldn't it have bounced right there? It should have bounced off of it, right?
It should have bounced off of it.
There's a neckline below it.
It's respecting it still.
Yeah. So that's the next neckline, and then there's one right below it.
But it's a downtrend, so it could come back and get that later.
Well, y'all tripping. So can you explain the breaker block to me?
Okay, a breaker block
the breaker block would have stopped price from going down, and it would have bounced, right?
It's still, it didn't break the breaker block yet though. It's still in it. A breaker block is when price is it's kind of like a double bottom, but the last leg of it, a double bottom or a double top, but the last leg will go lower as if it's still within the trend, but instead of it going lower, it'll break structure and break past that order block. So it should have respected that bearish order block, but because it broke it, he said you can expect price to come back to that order block and then go continue.
You talking about and retest the order block that was violated?
Yes.
Can you point it out, please?
So it's in the golden zone. It's that order. That order block right in the golden zone.
So it came back. It came back and retested. It filled that imbalance, but now it's filling another imbalance. It's clearing that imbalance. So price may come. Yeah, I don't.
Here's my problem with this breaker block.
Yeah,
we have just created a new bearish order block,
mm-hmm.
which tells me we're going to go lower.
You could.
Mhm.
You
I
could. That's why I said
think
we
if-
gotta watch it. I would like to see if it holds up. Because
Yeah, I
the
would take
next
it at the
2 week
78.
candle, the next 2 week candle could be another green candle, which is the same as a breaker block. Like it wick. This is the last leg of the wick low, and then it could buy up and break structure past that the bearish OB that it's creating.
So Ty, can you
So-
go to because of that 2 week candle and the pullback that happened on the last 2 week candle? Has it started breaking structure on the lower time frames, maybe like the
Well,
The
hour,
upside.
well, it started running up. We broke this level.
Yeah, so like it could be creating another breaker block on the lower time frames. Now, I agree that ICT, everything is not 100. That's why I say I'm curious to see if it'll play out. But according to all his arrays that he has, breaker blocks are the strongest, and that's why I like to look for them, because a lot of times they do play out.
I don't trade breaker blocks, but
I don't trade it either, but I look for them. I look for 'em.
no, I mean, so look, this is the way I understand breaker blocks, right? So if you have these highs, price pushes down, comes up. When the price pushes down and breaks the structure, it should just come back up to that and push down further. That's not a breaker.
Right. That's a mitigation block. A mitigation block is when exactly what you just pointed out, where it made a high, came down, made another high, but it broke structure. The difference between a mitigation block and a breaker block is the breaker block is going to run liquidity. So it's going to run higher than the last high and then break structure. So
Okay, I have to go back and do more.
Oh, she got you backing up, Todd.
But no, I said I don't trade the breaker blocks. Like
Yeah.
the concept. I don't. So ICT has, I mean, probably 30 or 40 different concepts, and more PD array, price delivery arrays than that. I don't trade every one of ICT's concepts. I trade the power of three. I trade the imbalance mitigation, which is basically what this did. Broke the imbalance, broke structure, came back, and price filled this imbalance. You put your stop loss here. That's how I trade. The breaker block, I want to say it was in the market maker series that he talked about the breaker block. And it
was in there. And
didn't
the
appeal
young
to me.
lady that's talking is right. I remember the way she described it. I remember that him saying in that series.
Yeah, I just
he glazed through it.
I think I call it the violated order block or whatever
Right.
he calls it. And I think once you break that and you're starting to retrace back to that zone, I think you're able to take your profit there. But I don't think you should be looking for an entry there until market structure and or price action gives you confirmation that you can take it from that zone. That's how I would look at it.
I guess my
Right,
point was
on the
on the
smaller
2
time
month.
frame.
I'm sorry.
Oh, you go ahead. No, I was just saying on the small. You look for the confirmation lower.
Like
look
you
lower.
can take your profits to that violated order block or breaker block or whatever he calls it. But
so where would you take your profit? At the bottom?
So no, I'm saying, so when price violated that order block, that impulse move up, right? And then price started pulling back, you can take your profit to that, right? You can take your profit there at least to see what price is going to do. And maybe take partials or whatever you want to do. Because one, it's at the 50%. It's but if you're watching the charts, then and price is not breaking structure to the opposite direction, you can just continue to stay in that trade until you start getting breaks the structure to the top side. That's all
I think this is eventually going to buy. And
oh yeah.
And the
Yeah,
reason,
that was my thought, because I was looking from, you know, from a 2-month time frame, because I'm trying to get myself completely off the charts every day. And so when I saw the 2-month, I wanted, okay, do you guys think it's gonna be maybe sell down some more? Or, you know, is it buying, but, you know, from that guidance of that 2-month candle. But then when I start going down into the lower time frames, and I'm like, ugh, it's doing some, you know, it's showing that it could
So-
sell down some more to the 78 or down even to the 88, which is cool. But I thought it was a good trade to, even if you don't, just to monitor it, because that can give you some good pips, for sure.
Mm-hmm.
on this 2-month, this is bullish order block.
Right, and it tapped into the bullish order block.
Tap in, it will buy. I just, maybe it needs to go down in a little bit further.
And that's cool. That's
No.
completely cool.
Yeah, it's going to eventually buy, I think. I just don't know that I would be buying it right now.
Okay, that was my.
If I do buy it right now, I mean, this needs to break the high right here for me.
Mm-hmm.
If you had caught it right here, then yeah, you know, when it crossed over, you
Oh,
could-
absolutely, because that
could have
moving
a
average is
great
in the right place for me, so I definitely would have jumped into that.
44. You know, NZD has had such a crappy run the last month or so.
Yeah.
You know, it's the very reason why we couldn't get a retracement on the GN.
Yeah.
NZD is just, the news has been horrible.
And for those who trade in AUD, they're changing their interest rates go up this week too, or they're got interest rate news Tuesday.
You don't know if it's going up. Last time it didn't go up at all.
That's what I said. They have interest rate news this week.
You need to raise whoever's in charge.
Can you look at AU when you get done?
What else did you want to look at, Selena?
Oh, that's okay.
Thank you, ma'am.
I'm just gonna hush. I'm hushing. I'm hushing.
Okay, I got the same setup, Ty. So okay, you keep
Or
going.
going higher.
Yeah. Well,
We don't know.
my little, no, I mean where the little position tool you had on is what I was thinking.
Yeah, that's what I expect. But you know, we'll see.
Yeah. Okay. That's all I needed.
We got that 2-week tap in.
I mean, you can look at UJ just for kicks and giggles.
I know, ma'am.
And why are you trying to be professional?
Worried about Todd, he gonna look at it now, he can look at it later. I'm not paying him no attention.
All
I
right.
think it's gonna sell. I truly do. Okay. Yep. I
Well,
like it.
Oh, the JP was.
Kim, you keep buying.
It's got a 2-month.
no.
It's got a
No.
2-month bullish order block too, Kim, which, you know, signifies it should definitely start retracing this.
No,
month.
I'm saying I agree with a sell,
Okay.
but I agree with a sell. Let me see. Let me look at the squiggly lines. Let me zoom in and look at the squig. Oh, go back to the. Oh, okay. I was trying to see if your squiggly lines was above the closed candle on the 4 hour.
4 hour. They
Oh, okay.
crossed.
Mm.
You so mean, Kim.
It didn't break this level. It didn't break this level.
That's what I would be looking for, to break it that low right there.
No, I mean, that's the next break, but it broke these lows.
Mm-hmm.
It broke that low, pulled back to give you another entry that you missed. You'll sleep on it, Kim.
Mm-hmm. I don't trade you, Jay, so I ain't worried about
You wake up.
it.
Broke this low right here. It wicked back up, put you in the and it came down. And now it touched the bottom.
Mm-hmm. Mm-hmm.
Wait a minute.
For sure, for sure.
Thank you, Mr. Todd. I appreciate it.
You're welcome, Selma. All right. So, my NJ. Did it respect this is your breaker block Ali Shah?
Alicia.
Is
Why
this,
are you tearing up everybody's
is this the
names?
Ali Shah breaker block?
Alicia.
Ali Shah, this is a breaker block, right?
It looks like a mitigation block to me.
What the hell? What's the difference?
The second leg has to run higher, run liquidity higher than the first leg.
Oh, so this leg had to run liquidity?
Yeah, it would have had to go higher and then break structure.
Then come down?
Yeah, so that's not a breaker block.
We're gonna make it a breaker block. Okay. All right, it didn't run higher. But this was the imbalance, I think. This was the imbalance that I would have loved to see get ramped. And it didn't quite get ramped. Maybe it's gonna go up there and run it before it sells. All right, anything else? I mean, that y'all want to look at?
Just EU, please.
So what?
EU.
EU. All right. You want to look at that cable? Hey, Sean. All right, all right, all right. Okay, let me see. Oh. EU. If AU goes up, then EU is going up. I like EU for the long. This is for the cool in you. All right, it still needs to break these structures. Where's that weekly chart again? We got a level of futility right here. Okay, so in my humble opinion, we had a 2-week run up, and we had a pullback that just touched the golden zone. So what I want to see is, because this is not really, to me, this isn't a bullish order block. I want to see if price is going to push down into the zone further, which would close that weekly imbalance. then for the run up, you know, I guess it could just pull back a little bit and push up. But and for me, the ideal situation would be for it to push down a little bit first, before it pushes up. These USD pairs they've been very wavy, very wavy lately, you know, very wavy. So I mean, I guess you just kind of have to wait to see the exact sauce we get that gets put on these USD McNuggets, because in my opinion, they've not been moving great together. So this one didn't pull down very far either, but maybe we're just going to get a shallow retracement. I like the idea of this being a shallow retracement more than I do EU, because of the way it moved. I felt like this dipped a lot more and a lot earlier than EU did, but I want to at least see this pull back to this level before it pushes higher. But if you're trading EU, I think EU, in my opinion, I want to see it dip past these lows. I want to see EU break this 4-hour order block and then give me a bullish order block to go up. You might not get it. So if you start breaking these highs and pulling back, going higher, then, you know, obviously it's not gonna pull back any lower. But to me, this is the high that I would look at, and this is the low I would look at. Ideally, I want to see it break lower before then going higher, but you know, we might not get it.
Yeah.
Can you look at the dollar?
Oh, the dollar's ugly.
Mhm.
The dollar's ugly. Okay, so let me just start from the higher time frame. So, you know, depending on your vision of the dollar, I think you can look at this either any way that your vision is set up for you to see the dollar. So one way to look at this is a shoulder, this is a head, and this is a shoulder, which would be an inverted head and shoulder. But to me, it would have been better if this would have closed above these highs, or at least at a bullish order block. Then I would give that more weight for the dollar to continue higher. The way that I view it and have been viewing it for a while is you fib from this high to this low, because we broke this low right here with this wick. We pulled back to the 78, and now we're pushing lower. So maybe this is just a rally or drop base, and we'll get another drop, you know. If y'all remember the video that we watched with your boy, Pips of Persia, anytime you're coming up on an order block, a lot of times the market will consolidate or create another distribution. So we had a distribution, the market dropped, it might redistribute right here, so it can push through this accumulation area. So that's the way that I see this, or I justify it in my head on that we're going to get another. This is a redistribution that we have going on now, and then we'll push through this area of accumulation to go down. Maybe you don't see it like that, but you know, that's the way my little dome is projecting the information. So we had the distribution, the market dropped, now it's redistributing. We got a bearish order block, so I expect for it to push down. I know it's on the wrong side of the moving averages, you know. So if Monday is a bullish, if this turns into a bullish order block, then, you know, obviously I have to recompute, but I would like to see this push down and eventually break these lows. What do y'all think? Ali Shah, OG?
No, I agree.
Y'all have
But
y'all,
if it doesn't buy up, we won't get our little 78 on EU.
well,
Which means I'm a miss the move.
hey, I know, but I mean, you'll miss it on EU, but you might catch it on something else. I think, what are we looking at?
Yeah.
You said
AU. I like AU.
Yeah, but you said NU. You wanted a 78 on NU?
Oh no, I said, I ain't say NU.
Well, but I think NZD USD got a nice 78.
Well, I let it go. I caught the last leg, but I was just a tad bit too early and price wicked me out.
That was a setup, Alicia. He was
Yeah.
Yeah, you know what? I missed this too. I saw it later, but I was looking at the
no, I missed the sell down. What I meant.
sell down from here.
Yeah.
Oh, yeah, I wasn't looking for the sell. I thought that it would come down to this area and push back up, and it did, but I missed the opportunity to get in. But to me, this is what we didn't get on EU and GU.
Right, they didn't pull all the way back.
Yeah. So, you know,
so if the dollar is done pulling up, then I don't know, maybe they will just buy up, go ahead and keep buying.
You know, like if you look at this chart, like this high was broken too.
Oh yeah, it was.
So I mean, to me, it's a no man's land. I can't really call it one way or the other for, you know, with 100% certainty. You know, when I look at that 2-week chart, to me, this is the best idea, you know, like that push down to break these lows, pull back 78. Now we're about to break this low, but you have to redistribute before we can break that low. I mean, that's how I justify it to myself. I don't know if it will play out. To me, it will be more clarity after this first week.
Can you talk about a 4-hour breaker structure because that last chart that you was on, you said, I think that was this chart. You said that wick was a breaker structure.
I don't think that was a 4-hour, but let's talk about it.
No, this right here, where you at?
Well, that is a breaker.
Right before that impulsive, no, to the right, the last impulsive sell, all the way to the right. Yeah, that wick up. You said that's a breaker structure.
It broke this structure. This is the high. We broke past that high.
So even though it didn't close, you still see, I see it as a liquidity grab and not necessarily
well, we can argue about it grabbing liquidity. It definitely did that. And you know, to me, it closed an imbalance, right? But the technical term is a break of structure because on some level, on some lower level, it did break.
It created the high, yeah.
So I agree. I like to see the candles close too. But you know, when we look at it, like even on the 2-week chart, this push down right here was a wick, and it broke this level. But if you look up,
I know, and that's why I said the difference between time frames, because on the higher, well, I guess like you said, depends on what time frame you're on.
But
trading.
I think it all runs hand in hand, because if you think about this, this is a low, this is a lower low, right? But without this wick, this wick, this is not a lower low.
Right.
So it would make all the difference as far as price pushing back up higher versus price coming back down. This wick break is supposed to tell us that this price is going to push lower. Supposedly. Right? When it came higher, it didn't break this high. Right? So
right.
It should push lower.
Yeah, I get you.
But you know, I think that's the level of nuance that you have to have when you look at market structure, is kind of the difference between you winning a lot or you losing. And how many people would have lost this trade right here? You got a bearish order block at the bottom of structure. Well, they be doing people dirty. The only thing that could have saved you out of this trade was you don't sell low.
What's the to the left of that though? Like would have.
No, man. Well, I guess.
But I'm saying, did it tap into an order block? Did it? You know what I'm saying? That's what I'm.
I think
Did it feel the imbalance?
It
came back and retested.
It had equal lows, but I think the more important thing is you buy low and you sell high. Because you broke this low, you can't get in the
You wait for it to pull back.
Yeah. It's hard for people to do though.
Well, Elfie, why you make that face?
Because my old me would have seen that order block and be like, okay, let's take it down a little more.
Yeah, exactly. A lot of people do that. A lot of people do it. They buy, they sell low and then they buy the high. You can't do that. You're gonna get broke off most of the time doing that.
Yeah, I learned.
That pullback saves lives, bro. See, I think this is going to go lower, Ali Shah. Because if you look at these wicks, this wick went lower than this wick. So pull back up here, maybe feel these imbalances. Come up to about this same level.
Oh, I think it'll go lower too. I hope it do.
What you think, OG?
I mean, I want to see somebody print some money. I haven't heard anything about printing. In July, we did a little analysis yesterday. I forget what pair it was. I think it was GJ. And how in 2007 it dropped July 20th. I think that was a good little back test right there. We're in July, the new 6-month candle, nice opportunity for a pivot.
But it's going to go up.
Right, it has time to go up,
Yep.
See, and come crashing down. Is there going to be any type of printing out of the Fed?
Was it printing back then? Do y'all know?
I know it was the beginning of the housing market crash. So that's all I know.
I'm going to go out on a limb and say in 07 they probably weren't. But in 09, maybe even late 08, they definitely were.
Right. So a lot of the analysts are saying that the end of the second half of the year is going to be nasty. So to me, that's not rainbows and sunshine. That don't mean bullish to me.
Well, I think the indices are going to be bullish. I looked at that yesterday after Sean, you said this is going to be the rally everybody hates.
It is. It's already the most hated rally.
Yeah, I think it's
right.
I looked yesterday. I'm like, damn, that thing's still going to go up.
Yeah. I don't know if you guys know who Raoul Paul is or Raoul Paul. I mean, he's a British guy, but he said his indicators say shit is going up. So, and
it is. I looked at this. It is. This is gonna go up. I mean, I can't find a candle that says sell this. Not one. Bullish on
right.
I don't know what his indicators are, but I mean the chart suggests we're going up to me too.
Look,
and I know
bullish on the monthly, bullish on the weekly,
yeah.
bullish.
Right.
On the
So I hear all the talking heads on, the American financial channels saying that we're gonna go down, and I get it, but you know, I'm gonna roll with Rob Paul.
We might be at
I'm gonna roll with Rob.
$55,000. We're gonna be.
Well, they say gold's supposed to be at its highest point by the end of the year. That, you know, yeah.
I think that's another reason it makes me think the dollar is going to drop.
Mm-hmm.
So I just don't know what the catalyst is for the printing yet. I mean, in a way, they already kind of have, you know. Remember when the banks were failing?
Yeah.
And they basically guaranteed everybody's money.
Yeah.
I mean, I don't know if anybody turned on a printing press per se, but if I got, you know, $1 billion sitting in a bank and it fails, but you guarantee my $1 billion is eventually going to make it out into the economy. So it's kind of printing to the back door to me.
Janet Yellen said they printed 600 billion.
Oh, so they did, you know?
Yeah.
And I guess they're probably printing all the money that we give to Ukraine, that they're probably printing that. So I think printing already is going on, but it's just not maybe so obvious.
Yeah. I think we should get some word in this next FOMC meeting. I think they're going to tell us something then.
Mm-hmm. Hey, the obnoxious British chick is online, Sean.
Oh, my homegirl.
My homegirl.
She's good people's, man. Don't be calling her obnoxious, man. And don't call her woke either.
the sleep British chick. Hey, can I call you Sleepy from now on, Leandra? Sleepy.
Excuse me, ladies and gentlemen. This is Leandra's mother speaking. Please do not refer to the British as obnoxious, or more directly, Leandra as obnoxious. Thank you very much and have a good day.
You guys are laughing. That's my mom.
Hey,
Mom has spoken.
You can hear exactly what you're saying. Y'all got Leandra messed up.
Mom has spoken.
Oh, silence in the court. Exactly.
Hey, I'm not gonna. I mean, me and your mother, Leandra, are probably about the same age, you know. But I'm gonna defer to your mother because I don't disrespect your mothers.
I won't tell you what she just said. But yeah, I'll be expecting that apology by WhatsApp whenever you're ready, guys.
Hey, Leandra, did you have a good sleep?
I'm actually a bit sick at the moment, so leave me be.
Yeah, you weren't on the meeting on time, so we were just wondering.
Yeah, I'm feeling sick. I was poorly. Well, I am poorly.
Sorry to hear about that.
Mm-hmm.
Is it a stomach sickness?
No, just like flu.
The flu.
Yeah.
Oh, and y'all's 1 week of heat, you got the flu? It's only hot over there for a week at a time.
No, it's been about 2 months. It's been a heat wave, but yeah, I don't know where it's come from. Probably run down. But OG, my BF, helped me out, so no worries about that.
Hey.
And Alicia, I'm sure.
Alicia?
Thank you, guys.